Hello viewers, got a great video for you now. It's all about the Keltner Channel Technical Analysis Indicator. I'm going to download all how that works, and on top of that I'm going to sprinkle some Renko magic, and further still add on some solid risk management applications that you may or may not have heard of to combine the whole lot into a really effective, powerful strategy that I've tested and got great results on, and something for you to go away and play with. So we got lots to get into, so why don't we start? Like most things in trading, simple concepts often work the best, and the Keltner Channel is certainly a very straightforward concept. It was designed by Chester W. Keltner in the 1960s and modernised by Linda Ashker, who replaced, like it says there, the original range with the average true range to capture volatility better, which is very important. And like I said, it's very simple, just a central moving average line, normally set, its standard default to 20 periods, and then around that two volatility based bands. They are 2 times the ATR above and below the EMA. So really simple, really straightforward. We're looking for price action behavior either within the bands, maybe bouncing up and down with inside those bands, or on the breakout from those bands. So what does the Keltner Channel look like on the charts? Well, here we've got the 1 hour S&P 500 E-mini futures contract. I've overlaid the Keltner Channel. I'm using TradingView here. Let's just drill into the variables. You can see their inputs. There's the standard settings that I mentioned, the length 20, a multiplier 2. There's some other little bits and pieces you can play around with in regards the band style, average true range or range, and the ATR length. I'm just going to leave that as the default. Now you can find that just by going up to your indicators at the top of TradingView and then typing in Keltner Channel, and you can see it there. You just click on that and it'll add it to your chart. Now, like I said, we could be looking for price action in between these bands, channels, to make our trading decisions, or we could be looking for breakouts as the price moves on out through the channel. Now, the astute amongst you, the ones with more experience of technical analysis, may see a similarity to Ballinger band. So I'm going to add on the standard Ballinger band now. And you can actually see there's not too much of a difference between the two. Let's just make the colours a bit clearer for you so you can see them a bit easier. Again, remember the defaults of the Ballinger band, also very similar. The 20 moving average, and as I'm going to go through in just a second, explain the differences between the two, but the Ballinger band using the 2 standard deviation. There are strategies around putting these two together actually, using the Ballinger band pinches and the Keltner band, so that's something else we can look into in another video. But let's just go through a table of why you would use a Keltner over the Ballinger band. So here's the key differences between Ballinger band and Keltner Channel in the table here. You can see center line for a start, slightly different style, simple in the Ballinger, Keltner in the exponential. That's not to say you can't change them anyway. Bandwidth, Ballinger bands is the big one, based on standard deviation in Ballinger and ATR on the Keltner. So in terms of sensitivity, probably more reactive and noisy, the Ballinger band, and smoother, more consistent, the Keltner Channel, which is why I've looked to then apply it to Renko, as we'll see in a bit. And in regards responding to trends, well, it expands more erratically, whereas the Keltner Channel probably follows sustained trends better. So if you could summarize that, you'd probably say Ballinger bands are great for mean reversion, but they often overexpand in volatility spikes, causing false breakouts, whereas Keltner channels are smoother and give you more stable, structured driven breakout points. And as I mentioned, if you combine either of them, but in this example Keltner into the Renko charts, that's when the magic happens. So let's bring in the Renko chart now. On the left here you can see we've got our standard candlestick chart going back over a few weeks on the S&P 500 1 hour chart, and then on the right we have the Renko chart. It's over the same time period. Now I've added time into Renko here. If you're new to Renko, don't know what I'm talking about, then I'll talk about further resource at the end, but I implore you to give it a go. It really is a great game-changing chart type for you to get into, and we're well covered off on this channel with the resource to make you better at that. But just want to show the example with the Keltner channel here. Now let's focus in on the Renko chart. Now what the Renko chart is, it takes out the noise. Just really look at these nice strong trends, really clear breakouts that we've got. We've got really obvious reversal points. Flip over to the candlestick chart there on the left. A lot of noise in the price action, red green candles all over the place. Is it long, is it short? Unsure. Not so clear movement between the channels, and the breakouts, well, they're certainly a lot harder to read than the Renko, and that's why I use Renko. It just simplifies things, takes out the noise, makes your trading so much easier, and that's why in this video I've put together a strategy that looks at a combination of the Keltner channel and the Renko chart type, and that's what we're going to have a look into in a lot more detail now, and I'm going to show you how it could possibly work for you. So let's bring in the Renko chart now. On the left here you can see we've got our standard candlestick chart going back over a few weeks on the S&P 500 1 hour chart, and then on the right we have the Renko chart. It's over the same time period. Now I've added time into Renko here. If you're new to Renko, don't know what I'm talking about, then I'll talk about further resource at the end, but I implore you to give it a go. It really is a great game-changing chart type for you to get into, and we're well covered off on this channel with the resource to make you better at that. But just want to show the example with the Keltner channel here. Now let's focus in on the Renko chart. Now what the Renko chart is, it takes out the noise. Just really look at these nice strong trends, really clear breakouts that we've got. We've got really obvious reversal points. Flip over to the candlestick chart there on the left. A lot of noise in the price action, red green candles all over the place. Is it long, is it short? Unsure. Not so clear movement between the channels, and the breakouts, well, they're certainly a lot harder to read than the Renko, and that's why I use Renko. It just simplifies things, takes out the noise, makes your trading so much easier, and that's why in this video I've put together a strategy that looks at a combination of the Keltner channel and the Renko chart type, and that's what we're going to have a look into in a lot more detail now, and I'm going to show you how it could possibly work for you. Now these are the inputs to the strategy. On our right chart, that's the trend filter chart, we got the block size set to 3 times the trading window, the execution window block size. So in this example it's set to 9, and we got the stochastic indicator set at 111, and the execution window, that on the left, block size in this example set to $3. Now obviously for different markets it's going to be different, but still use that times 3 ratio. Play around with the different block sizes for the S&P, see what sort of results you get. I wanted a strategy that produced maybe 1-2 trades a day over a year, over a day, and then times that by a year, that captured really strong trends, can give you some good results. So it's a slightly slower strategy if you have a higher block size. Then we've just got the Keltner channel as a standard setting, the stochastic at 733, and a moving average at 9. So let's get back into the strategy then. So our first rule of play here is to go over to the filter window. And all we are using is this stochastic down the bottom here. Now I'll set it to 111. You can see there on the settings. 111 there. That makes this a very fast indicator. But on the bigger block size, it makes it also a very nice trend filter in with momentum. So what we're doing here is, at the moment you can see the trends obviously up, but we're looking for anything above there as a bullish opportunity. And as we can see, let's just clear off those drawings, and as we can see here, as the stochastic breaks down through the 80 setting, we would then be short, only looking for short trades in our execution window until it comes back on up through. So we're bearish all through that period and bullish all through that. So we're only going to be taking the trades on our left sided Renko chart, the execution window, in that direction. So then if we hop over to there, what are we actually looking for? Let's just zoom in, make it a bit easier to see. Firstly, the stochastic, that's where we're heading first. We want to see something bullish going on. So we've got the cross moving here in this example, and it's really straightforward. We can see the yellow bands of the Keltner, the channel there, and as that block breaks out, we get one full block breaking out, we get into that trade. It's as simple as that. And if I zoom in again just to make it even more obvious, what's the white line? Well, that's the moving average set to 9. Let's just click on there just to show you. Set to 9, and we got in the trade around about here. Let's clear up and tidy up quickly. We got in the trade about here. So we've got our buy down on the stochastics. It's broken up through the bands through here. We get in. We're clearly outside the channel. We then will run that trade up, and we will exit as the price moves back down through the white moving average line. Now you're asking, where does the stop go? Well, I like to use the middle line as the stop. So in this example, we've got a $3 block size, so we're talking about $4 or $5 stop. And you can see if you did something like that, that gives you a very nice risk return trade. And it's exactly the opposite for a short trade. We would look for the move below the stochastic like we've got here. We got the short side on the stochastic, but look where we are in terms of the band. We're right up the top. We'd have to be down here if we're getting interesting short, but that all be negated anyway because we go over to the right chart and it's all telling us to be long only. So that's a really effective filter on your charts here. And if you did scroll back through the data, you will see it working very nicely in tandem with this setup. So that's really the basics of the strategy. I'll just summarize the rules again now for you. So remember, right chart first, the trend filter, stochastic 111, is it bullish or bearish? You decide quite simply through it moving through the up through the 20 mark on the stochastic, the oversold line, and then until it goes back down through the 80, it remains bullish. Vice versa for bearish, and you only trade the execution Renko window in that direction. Then number 2 there, in the execution window, we go to the stochastic. Is it a bullish bearish cross? Is that in the same direction as our trend filter? If it is, then we're getting excited, and then we wait for the price to get out of the Keltner channel, one full block there before going in. And where do we put our stop? It's that middle Keltner band just below that for a long trade, and vice versa for the short. And we get out of the long trade if the price falls back down through the 9 moving average, and vice versa for a short trade. Now I did do a back test to give you an idea of the sort of results you can get from this strategy. Now the back test, well, the results were pretty decent. Now with the right hand trend filter, it does reduce the trades down. You could just take the left hand side and you get about one and a half trades a day. If you put that filter on, it does reduce the number of trades per day. Now did this test over about a year and a half's data, so you're going to probably ask me, is that the right period to use? Well, I did take in, a choppy period. And remember, our filter is fast enough, trend filter, to get us into good long and short trades. I tested it on a few other variables and it did seem to work quite well. But back testing, quite tricky in the world of Renko. And I'm talking more about that on my masterclass coming up 3rd of July. More details about that at the end of this video as well. But also the block size, I've used a fixed $3 through that whole period. Was that appropriate? Well, the results show that it was pretty decent, but you might want to be more dynamic and think about the block size to improve the results further. What did we get here though in terms of actual backtest results? 132 trades, got a win ratio just under 70%. Now the total profit there says $8,724. Now that's assuming we started with $10,000 and we're risking 150 trades, so it's an 87% return, which is pretty decent. A max drawdown of $750, so 7.5%, not too bad there either. And the Sharpe ratio very, very good at 6. Now the S&P was trending very nicely during that period. It did have some sideways movements as well, which it looks like the strategy coped with, but that's probably worth some further testing as well. But overall, results really encouraging for this strategy. And like I said right at the start, it's something you might want to think about, taking a bit further, digging in a bit deeper, see working on other markets, trying different block sizes, and giving it a back test yourself and seeing what you can do. I'd love to hear what you come up with in the comments under this video. But that's the general back test. Results looking pretty decent. What we didn't touch on in great detail is that if we took that back test and then used some clever risk management theory, game theory, such as the Kelly criterion, or just simple compounding of those returns, you can skyrocket the performance even further. Just with some smart thinking, outside the box approach to your trading and how you manage, the strategy. Really simple stuff that can take it to the next level. But in this video, hopefully you've learned all about Keltner and seen the benefits of using Renko over a candlestick chart with the Keltner overlaid. Love to hear your thoughts in the comments about whether you use this sort of setup, whether you use the Keltner, do you use Renko. Like I said, get those thoughts, ideas coming in. Love to hear from you. Talked earlier about Renko Resource. Now if you're new to Renko, we've got you super covered on this channel. Huge playlist of content you can work your way through. But on top of that, also as you can see over my shoulder, just over there, got my brand new book out, Renko Chart Trading Revolution. Now that's available on my website on the bookstore page, and I'll put a link in the description below this video so you can check that out. But also at the end of this video, I'll put a link to another video that gives you an inside look at the book anyway, so you can see what it's all about. And also we've got a masterclass coming up just next Wednesday. It's live online. Don't worry if you can't get there on the right time, because it's all recorded and you get the link to keep forever. But it's a Renko practical masterclass of how I put together a strategy from start to finish. All the tips and tricks in there for you. Link in the description below this as well. Have a look at that and you can see the content and what you'll be getting, and you might find that very useful for your Renko education and learning. Well, that's pretty much it for today's video. So if you've liked the video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content, such as this and all the other stuff we get into on the channel. All that's left for me to say then is thanks for watching. Hope you've enjoyed the video, and I'll see you in the next one.